Good morning and welcome to the trade setup right here on BloombergQuint Live. It's Friday morning and it could be a continuation of the bullish sentiments that we had. Who knows? The weekend profit booking, if it does come about, it's in the second half of trade the way we had thought of last week as well. Don't quite know, but otherwise seems to be a placid start. Nothing too untoward. That's the point I'm trying to make. First, the US markets, and they had a fairly decent outing in trade yesterday. Good moves, up about 500 points there for the Dow, which is pretty exciting. But the Nasdaq and the S&P also doing okay. And the curious part was that the US markets, and not curious really, but I'm just pointing it out, that both the yields as well as the equities moved higher in trade. That the market seemed to be taking comfort from the point that while the Fed may move on the taper and maybe interest rates, and they've started talking about it, they would probably do that only once the economic recovery is in place. I think that's why we saw this combination of a rise in stocks and a rise in bond yields as well. Let's see if this were to continue. Too macro really to try and predict. It's like a toss of a coin, but when it happens, it's best to point it out. And mind you, even European markets did okay despite the Bank of England interest rate decision as well as commentary. FTSE was okay, but the other two did okay. Now, Asia and SGX Nifty should come up on your screen next. The SGX I would suspect would be flattish in trade. Let's look at what the rest of the Asian pack is doing. I would be surprised if there are very big moves there. Well, as you can see, largely a flattish move. So keep that at the back of your mind. The SGX Nifty should come up on your screen next. I would suspect it would be a flat start that the SGX would be indicating. I'd be surprised if there's something otherwise. Yeah, about 0.11%. So nothing too great there. Now, first a check as to what happened in the trade yesterday. The MOV function should come up on your screen next, and it'll show you the market breadth as well as the individual movers. And I don't usually say we told you so, but I mean, it was a no-brainer that companies within real estate, spec chem, etc., would be doing well. I think we saw some evidence of that yesterday. What didn't do well yesterday was oil and gas, but I suspect that will come back. But just look at what's happening. Real estate was at the forefront in trade yesterday. Oberoi Realty, 13%. Godrej Properties, 12%, 2199. And much as people believe that large real estate companies may not grow, DLF, I think in the last less than 6 months has doubled from 200 to 400 or thereabouts. But everything related to real estate did really well in the session yesterday. Some of the laggard plays, and we've been talking about how the laggards are coming to the fore. So it's not just happening in ITC, by the way. United Spirits, yet another name. Yeah, 7% higher in trade yesterday too. Trading at fresh highs, 820, 829 for itself. Really good going. There was strength in Indian hotels, 6.5%, 183 and higher. And there is some bit of demand for the hotel names for sure. So those are a few that you got to monitor in the session. There's a bit of a pause there for Z Entertainment, but almost everybody unanimously still continues to be bullish. Though yesterday we did highlight how the deal may have left a bit of few of the investors a bit disappointed. And you saw that. It seemed the deal tailor-made for the promoters, but still, I think I've seen enough and more brokerages coming out and saying that things are okay. Let's wait and watch if indeed the stock were to do well. FIs, so the trade setup for the day today, right? I mean, there were strong global moves which would aid the further up move in the indices today, flattish to marginally on the higher side, unless, as I said, the weekend profit booking kicks in. I'll be surprised if we see a day in the red. Tech will get a further boost today post Accenture numbers, and I think what stood out from viewers, just see the kind of HNI and overall subscription for Paras Defense. Yes, it's a small IPO. It's not a very large IPO, but still 900 times for HNIs, overall 303. It is by far on record the largest subscription or over subscription for a company in India. And at these levels, it tells you a story. You could argue it tells you a story of exuberance, but it's not like there are 10 IPOs out here and therefore everybody's getting subscribed. I just thought that people were maybe a bit discerning about what's happening within the defense space. And maybe that's why it also got, of course, strong anchor book subscription helps. And I think today there is a lot of chatter about how India's long delayed plans to overhaul the military are getting a new life. This I'm reading verbatim out of a Bloomberg article. Prime Minister Modi, as he's gone to the US and doing the Quad meeting today, brings all of defense in focus. So viewers, it's a space that you don't want to, I mean, if you researched it well, don't just let it go by lightly. This could be a bit of a moment of change. You always hear about sectors getting winds of change. They don't move for a really long time, and then they really start moving. I think we've seen the start of that in defense. Some of the good companies, you never know what could happen with them. 2 3 years down the line. Keep in mind, just one small brief here. Year after year, when we had spoken to defense companies in the past, they had said that there were promises made, they'd set up capacities, but it never got fructified. This time around, we hear companies sing a different tune, and that's why it seems to be promising. FIs had bought a little, DIs had bought a little, so that story continues as well. What about stocks to watch? Not too much from mine today, but a few that I thought were interesting. So of course, I would watch out for Nifty IT today. I don't need to tell you why. I mean, I think everybody knows about this, but the Accenture revenue met expectations, of course. And while the brokerage views are a bit of a mixed bag, I thought the Q1 guidance and the commentary in the call that I read seem to be pretty strong. It is better than some estimates, and I do think that it could help Nifty IT today. So let's see. Some of the IT names which have models which have strong resemblance to Accenture could be interesting ones. I'll watch out for Reliance Industries, interestingly, and internet. Not that it does, these things do too much to the stock price of Reliance. It does what it does. But an international proxy advisory firm has recommended voting against appointment of the Aramco chairman to the Reliance board. That would be quite something. Um, I I doubt. Somehow it's a gut feel. Call it a gut feel. I don't have any other reason to back it. I haven't spoken to any kind of institutional investors for such a thing. But yeah, I doubt it'll do too much to Reliance. But still, important piece of news. So brought it out. It's a very important story, by the way, and you should monitor it. Not every story doesn't have to be looked from a prism of what it does to the stock price. Though on trade setup, that's what we do. Dilip Bitcoin was pretty active yesterday, 5% higher. The Supreme Court has confirmed appointment of Dilip Bitcoin and VPR Mining Infrastructure as the mine developer cum operator by Punjab State Power Corporation. The total contract value of the tender, 32,000 crores. I'm sure it's spread over a number of years, but this is large and could prove to be a bit of a booster for Dilip Bitcoin. Couple of brokerage notes that I thought were interesting. And like I said, Z Entertainment, I've been talking about it. And much as the stock price went down yesterday, and people also questioned whether this is a deal tailor-made only for the promoters, I think the Credit Suisse note seems a bit balanced, and that's why I've brought to you. So they are saying that there's an outperform with the target price raised to 400 from 320, which is circa the current price. Now, they believe that it increases certainty for minority shareholders and there's negligible dilution for the core business, even if they haven't said it, but even if promoter shareholding remains what it is. They increasing the target multiple to 22 times, and the deal may take about 6 to 8 months to complete. And they're saying that even though people may not have liked the deal, the merger falling through for any reason is a negative risk to our thesis. I'm presuming they are buying on the multiple side and not really anything else. Now, maybe their view is some bit of negatives can be taken if there is a larger positive at hand. Let's see, there's been a mammoth rally in Z. I remember on the day of the deal announcement at 2:20 when the circuits opened in Z Entertainment, there was frenzied buying, of course. As per reported numbers, Rakesh Junjunwala bought in at 222. From there, it rallied all the way to 345 before correcting to 320. So even if you look at the yesterday's price and believe it's corrected 5%, from 180 or 190 odd levels, it's already at 320. So that's a really mammoth run in a matter of 5-6 days. But yeah, look at this stock price chart, right? It tells you a story. Pretty crazy, the moves in Z Entertainment. Let's see if there is more in store. And the CLSA note on steel is interesting too. Clearly, they're not buying the weakness, or rather, they're buying into the weakness. They're not buying the weakness argument. But it's again a balanced note, and that's why I brought it today. They're saying that the recent Chinese property market weakness is likely to be an overhang in the near term on steel demand. This is precisely what we are speaking about, viewers. And yesterday, I confessed that I went wrong here. But people are saying that there could this could well be a factor for near-term steel demand. Let's wait and watch. The tailwinds of lower coking coal and higher iron ore prices enjoyed by steel mills in the past year have started to reverse, and we've seen that, right? Iron ore prices have come off, even though there was a bit of a rally, and coking coal prices have inched higher, which is what JSW Steel chairman or MD told us as well. But the point is that the supply cuts and the higher costs are likely to keep steel prices resilient, according to CLSA. And they believe that the current stock prices and estimates more than factor this all of these factors in. They find the risk reward favorable for Tata Steel. Do watch out if you're a believer in steel. Maybe Tata Steel it could be for you, but just be careful when trading commodities when China is going through so much of overhaul, etc. Here's the other thing is I'll watch out for AMC stocks. I'm giving graphics, but I'm just telling you I'll watch out for AMC stocks in the Birla. AMC is coming out of the IPO. Look at the valuations. I think it's coming at a market cap of 20,000. You might want to watch out for some of the others. Tin has surged to record highs if indeed there are related stocks there. And oil and gas. Yesterday, Oil India was lower. ONGC was flattish, but crude has moved up, and everybody's talking about very high prices on gas as well. Do watch out. I mean, our prices would be a revised mechanism based on a formula, but still watch out for both oil and gas and ONGC. And last but not the least, watch out for Bajaj Finance. It continues to find favor with and despite the valuations. Chris Wood, in its latest Greed and Fear note, has said that they'll make some small adjustment. The Greed and Fear will make some small adjustments in the Asia ex Japan long only portfolio. The investments will be in C Limited. It's a global company. I mean, a foreign company, and Bajaj Finance. Both of these companies, and Bajaj Finance, particularly from our perspective, increased by 1 percentage point each in the Asia ex Japan long only portfolio. It's not an India portfolio. I'm sure it must be there in India portfolio too. But in the Asia ex Japan long only portfolio, they're increasing the weightage by 1 percentage point. And that's telling at these valuations as well. Bajaj Finance continues to find favor. Of course, the bulls will say that look at the valuations of some of the fintechs, and then you believe that Bajaj Finance is actually cheap. Well, let's see if they add a tech layer, which they are on the amazing business beneath, and then what kind of valuations it can get, right? Anyways, stay safe, viewers. If you're stepping out, thanks so much for tuning in today, and have a great weekend.